the total crypto market remained firmly above the $2.2 trillion threshold, despite another wave of geopolitical escalation in the Middle East. While headlines continued to deteriorate, price action tells a very different story. Investors are clearly acknowledging the risks, but they are not yet pricing in a prolonged global economic shock. So as we read thoroughly through this, we're also going to take a look at some updated levels on XRP, as I firmly believe that we are on the precipice of possibly breaking above the 116 threshold that we highlighted in another video breakdown to possibly come back up and target higher levels at 129 to 136, which will offer some interesting scalping intraday opportunities. All right, for people in this community that track mine and Scalper's XRP updates, all right, so Scalper Obvious, of course, giving everybody updates in the Delta Education section, which have been extremely accurate. And then I've been making updated content, giving you guys level-to-level updates on these. So our last update from July 17th, real fast, let me just play this recording because in my personal opinion, timestamps matter, because none of this accuracy would matter if we were calling it out after, and instead we try, myself and Scalper, to let you guys know in advance what moves are going to take place. So this was the last update that I gave you all. I mentioned that if we can hold above $1.03 to $1.07, that the next bullish target and hurdle for us to overcome before we see any higher prices on XRP was $1.16. At 9 and buyers are able to make a formal attempt to defend, we could see price get pushed back up into the higher level at $1.11. That $1.11 threshold becomes the last line in the sand for sellers. We need to see buyers break that, breaking previous bearish structure, retesting that, and then that would be a case for a possible recovery back into $1.16, which. All right, so that was the last update, July 17th. It is now July 22nd, and we have seen that trade idea materialize and come into fruition. We defended the $1.03. We respected $1.07. Buyers were able to absorb sell volume in between $1.11 and $1.07. We then pushed above $1.11, as we mentioned, and turned that into support, trapping sellers at $1.11 dark pool, and we came straight up into the $1.16750. What I want you guys to pay attention to is it's not just that we mentioned $1.16. In the previous video breakdown, you can see that we had highlighted $1.16750 because that was the specific threshold for the dark pool. If we come up here, let me meet you guys. Are you the type of person who's always felt that they're... Where is it at? Straight. What is going on, everybody? Welcome back. Okay, here it is. To another CYPRX video breakdown. All right, so you can see here in the screenshot, it was the $1.16750 mark. And so now we see coming up into XRP's dark pools, we have respected the $1.16750 to the almost absolute pip, right? So anybody watching this in terms of people that are not inside this community that are tired of the, bullish Moonboy hopium and the hype, and they want accurate level-to-level updates down to the freaking sub penny, then again, come tap in with us in this community. We're just here trying and attempting to show retail traders that a level playing field does exist. And instead of guessing on Fibonacci extensions and retail indicators and bullish Moonboy hopium and hype, you guys can have the same level of accuracy in this community that institutions have access to. All right. So now with that being said, that we've met this institutional $1.16750 threshold, if we want to see higher prices in the coming days ahead, which to the upside, mind you, their most recent updates, the next hurdles to the upside coming at $1.29 to $1.36, where we are likely to start to see some defense from the sellers that previously defended in these areas before, back in the end of May. Above $1.36 to $1.29 would be $1.57 to $1.77 as our next hurdles to the upside in an extreme risk-on environment. So for now, as of time of recording, we are currently operating in this bullish environment where we have broken above two previous bearish structures. We have now made bullish order flow in between two dark pools, higher low, higher high, taking out a previous bearish leg, printing bullish order flow, and after sweeping lows from the left-hand side. So right now, the most immediate hurdle comes in at $1.16750. if we can see buyers defend at these bases, which right now, the bottom of this base comes in at about $1.07943. So anything above $1.07943, even if sellers were to defend at $1.16, push price back down into this base, buyers could still defend it and push price higher. If we retest $1.16750, turn it into support, then the next institutional hurdles for us to see buyers overcome is going to be between $1.29 and $1.36 before we get overly excited on any higher XRP prices. So this would be trade idea number one, or bullish scenario number one. Bullish scenario number two would be if we do not get that deep retracement back down into the recent base that we've created, and instead we see buyers break out above $1.16750, turn it into support, trapping all these sellers that are likely to try and attempt to defend, become aggressive, and push price higher. So right now, as of time of recording, the next hurdles to the upside come in at $1.29 to $1.36. Like I mentioned, in an abrupt bullish environment, anything above $1.29 to $1.36, and we're going to start to target $1.57 to $1.77 as our next hurdles to the upside. I'm sure that we'll have another update before that comes into fruition. So these right now are my two most immediate bullish scenarios. To the downside, and I saw your hand, Luke, so I'll come back to you here in just a second. To the downside, right now, I would only flip bearish on XRP if we broke that last line in the sand or the most recent base that we've created at about $1.07. Breaking that $1.07 threshold, which I believe as of recent, there was an updated level on the dark pools in between $1.11 and $1.07. Deleting both of these, I think it comes in at $1.09, if I'm not mistaken. So a break below $1.09 to $1.07, bearish price action, and a sell delta held beneath those levels would reopen the door for $1.03. Anything below $1.03 would reopen the door for that bearish scenario back down into 91 cents. Far stretch away from where we're currently trading right now, as we can see that buyers have made a formal attempt to defend at these dark pools, and they still maintain the upper hand at time of recording. So right now, the only thing on my radar for further downside on XRP would be a break below $1.07, breaking beneath and overcoming all of these buyers here in this area with the bearish close below, which could open up the door for a deeper retracement down into 91 cents, excuse me. Right? But the only thing in my personal opinion that would cause something like this would be the markets pricing in aggressive rate hikes from the Fed due to some type of Middle East elevated tensions, or some type of existential yen carry trade unwind or aggressive intervention that creates excessive strength in FX currencies that create market volatility across the board. Right now, I don't see this scenario unfolding. I think that momentum is in favor of the buy scenarios that we just went over, but for now, those are the levels to be mindful of. Let's just real fast go over the updated levels. Yeah, so $1.03799 still holds. We need to change the $1.11 and $1.07 to $1.09595. So we'll do that right now. $1.0959. $1.0959. And we'll get rid of $1.07. And so right now, that is the dark pool in between $1.16 and $1.03. So as long as price holds above $1.09 and holds above this most recent base, the path of least resistance is to the upside. All right. So hopefully everybody's clear on this quick XRP update real fast. We have also been giving updates to the public on Canton. Right now, Canton is hovering at the 12361 dark pool. Buyers are currently holding sellers at this level. We have defended it twice, but we are still printing bearish order flow at and around this level where we can see that the highs of the buyers that are getting trapped are failing to push price not only above the 50 EMA, but also failing to print bullish order flow after having reactions from the dark pool. So for now, path of least resistance remains skewed to the downside until we start to see some bullish order flow from the 12361. So the first sign that buyers are back in control would of course be a break of this most recent sell wall, which would also coexist with the break of the 50 EMA, that would be a meaningful case for a recovery on Canton. The next hurdle to the upside, of course, will be the 13,916. In an excessive bullish environment, any bullish break above the 13,916 opens up the door for a revisitation of the 15.6. I'm sure we'll have another update before then. To the downside, which is something that I personally favor, I would like to get in on some more Canton at a further discount at some deeper buy dark pools. Underneath of 12,361, if sellers can gain the upper hand, break through these recent buyers that have defended the 12,361 multiple times now, holding price at this level. If we can see a nice bearish close below, I wouldn't be surprised if we see a nice squeeze underneath of this level, especially if we get a close, and that could open up the door for a much deeper retracement with our next bearish target coming in at 11,021 for some good dollar cost average positions. Underneath of 11,021, of course, we'll keep on our radar the 9,453. All right. For now, however, buyers are holding at the 12,361. Let's see if they can defend, absorb the sell volume, trap the sellers, and break back above the 50, which will be our first indication of buyers making a meaningful attempt to push price back towards the dark pool at the 13,916. The latest developments saw U.S. President Donald Trump at the beginning of the New York session today warn that the United States would destroy any Iranian bridge or power plant every time Iran attacks shipping in the Strait of Hormuz. Overnight, U.S. forces launched another round of strikes against Iranian targets, marking the 11th consecutive night of military operations. Iran responded with missile attacks across the region while continuing to threaten energy infrastructure throughout the Gulf. You can see that announcement here. Now, ordinarily, this type of geopolitical backdrop would trigger a broad risk-off move across global markets. Instead, both crypto and equities have remained remarkably resilient for now. The primary reason, just like Eric said this rising when I asked the question, what did the markets actually do? The primary reason is that financial markets continue to assign a meaningful probability that diplomacy ultimately prevails. Although military operations continue to intensify, U.S. Secretary of State Marco Rubio reiterated this morning that Washington remains willing to negotiate if Iran demonstrates genuine commitment to discussions. Markets are continuing to interpret this as evidence that diplomatic channels still remain open, preventing investors from fully pricing in worst-case scenarios. This distinction is important. Why? Because markets do not trade today's headlines. They trade expectations of tomorrow. And so you can see that announcement here. Even though we got this negative reaction at 7:56 a.m., we all know that Trump likes to manipulate the markets with his little tiny posts. So what was he likely commencing this morning? Insider trading. So that way all these high-end investors can buy S&P 500 and NASDAQ at a brief discount prior to the earnings, right? So that way, even if the earnings come out downbeat, what did the investors get to do today? They got to buy at a discount, push price higher. If earnings come out bad, then what do they get to do? They get to sell at a premium. If earnings come out good, then win-win. Trump manipulated the market this morning to push price into a discount so they could get the best buy to push price higher. See how that works, right? They always win. So as long as investors believe negotiations remain possible, capital has been willing to absorb negative headlines rather than aggressively reduce exposure to risk assets. And I saw that this morning when I was reading and writing these reports for you all, which is why pre-market session open, I still continued to hold and give you guys the bullish narrative first, which was my main bias for the day. Because I saw that this was a bunch of manipulation. I think MC shared this at 8:10. So I went in and I was like, all right, let's pick this apart a little bit. And that's why I gave you guys the bullish scenario first, right? Because I was seeing the misalignment of what the market is likely to price in versus what the headlines were saying. The largest macro variable to continue this breakdown is still crude oil. Brent crude oil has climbed back above $94 per barrel as concerns surrounding the Strait of Hormuz continue to build. Roughly 1/5 of the global oil supply normally passes through the shipping lane, making any disruption immediately inflationary for the global economy. Higher oil prices, we know, eventually translate into higher transportation costs, higher manufacturing costs, higher consumer inflation, and slower economic growth. If oil continues climbing substantially above current levels while the strait remains under threat, markets will likely start to begin pricing in a far greater probability that inflation becomes persistent once again. For now, that is not to be the case. because a bunch of what's happening right now in the Middle East is still just a bunch of threats. Trump threatening Iranian infrastructure, Iran threatening retaliation, and just threats back and forth while diplomatic solutions and negotiations still remain on the table as a possibility. So if these things continue, that would represent a significantly more bearish environment for both crypto and equities, but we would need confirmation of further escalation. Despite the higher energy prices on the Fed outlook front, we still have inflation expectations actually continuing to moderate following last week's softer CPI and PPI reports. We can see this in the headlines. It says inflation expectations have fallen sharply following last week's benign CPI and PPI report prints. Yet the market continues to price in a meaningful probability of interest rate hikes by the Federal Reserve, a disconnect that appears mispriced. On the balance sheet, the Fed is likely to look through near-term energy spikes and hold rates steady for an extended period. That's not bad for that's not necessarily good for risk assets, but it's not bad either because the markets aren't pricing in rate hikes. They're just pricing in a higher for longer interest rate environment, and rate hikes most likely have already been priced in. Interest rate markets continue pricing in meaningful odds of another Federal Reserve rate hike, while incoming inflation data increasingly suggests inflation outside of energy continues cooling. Institutional investors appear to believe this pricing is overly aggressive, right? So this is something, again, that is supporting risk sentiment. The current market expectations across much of mixed income is that the Federal Reserve will likely look through temporary oil-driven inflation rather than responding immediately with tighter monetary policy. You can see that again here. And I got this report from, I think it was ING. It was an ING reading. And it says here, while a restrictive monetary policy stance remains a close call, the Fed is likely to look through localized energy price shocks, opting instead to maintain the federal funds rate at current levels before eventually executing a pivot. And if we see the Federal Reserve pivot from their current hawkish stance to a more dovish leaning stance supporting easy monetary policy, y'all, we are going to see risk assets, especially crypto, that thrives off of easy liquidity conditions absolutely skyrocket. Okay, so just keep that in the back of your mind. In other words, policymakers are far more likely to tolerate a temporary geopolitical energy spike than react to it with additional hikes. That's as of time of writing. This removes one of the largest potential headwinds for risk assets. Instead of markets worrying about both war and tighter monetary policy simultaneously, investors currently believe that the Fed remains positioned to keep rates steady while monitoring incoming data. This distinction has helped stabilize both crypto and equity markets. Another reason markets have remained relatively stable comes from the Treasury market itself. The current yield curve continues showing characteristics that historically appear near the end of tightening cycles rather than beginnings of new ones, which is also supportive of the risk-on backdrop. Institutional investors continue highlighting fallen inflation expectations, and these are all reports from, I've read a couple of JP Morgan, Bank of America, ING, UBS reports, and most of them are saying that they see falling inflation expectations, rich pricing within the 5-year Treasury sector, stable swap spreads, and limited stress across sovereign debt markets. Rather than preparing for an aggressive tightening cycle, bond markets continue signaling expectations that policy remains restrictive before eventually easing once inflation sustainably returns towards its target. As long as long-term yields remain orderly and credit markets remain stable, risk assets have the room to absorb geopolitical uncertainty. Last but not least, we have earnings season, which is now becoming equally important as the Middle East tensions and the central bank backdrop. Markets are also entering one of the most important earnings periods of the quarter. Today, our primary focus at market close will be towards Tesla, Alphabet, so on and so forth, and some other small tech companies. Other major tech companies. Other vehicle delivery numbers have already been released. Investors right now care far less about deliveries than they do about future profitability in AI investment. So we will be closely monitoring any automotive profit margins, robo-taxi rollouts, full self-driving progress announcements from Elon Musk, Optimus humanoid updates, as Elon Musk mentioned that he wants to shift his focus in Tesla from cars to humanoid robots, AI infrastructure spending, and capital allocation following SpaceX developments. Tesla increasingly trades as an artificial intelligence company rather than simply an automobile manufacturer. Any positive guidance surrounding autonomous driving, AI infrastructure, and robotics could reinforce broader optimism surrounding the AI investment cycle, which could provide additional support for the Nasdaq, by extension, of course, crypto markets. Conversely, we need to be mindful of any disappointing margins or weaker than expected AI forward guidance, which could create renewed selling pressure across tech stocks and spill over into digital assets. With Alphabet and other major tech companies also reporting today, earnings season now becomes an equally important driver alongside geopolitics. So, to wrap this up, despite military escalation, crypto continues holding above the psychologically important $2.2 trillion threshold that we mentioned in previous Zoom calls, as that was last week's high. Several factors explain this resilience. First, investors continue expecting diplomacy to eventually resume despite increasingly aggressive rhetoric. The Federal Reserve is not expected to respond aggressively to temporary energy-driven inflation. Third, Treasury markets remain relatively stable, signaling confidence that financial conditions are not rapidly deteriorating. And finally, we have earnings seasons that have the potential to inject fresh optimism into the tech and AI-related sector and assets alike, which often supports broader digital asset sentiment. For a meaningful breakdown, as this is what is currently driving the current optimism in the market. So hopefully right now, nobody is confused as to why the market is up today, both crypto and NASDAQ. For a meaningful breakdown or reversal of the current sentiment, we would likely need to see a complete collapse in diplomatic negotiations, sustained closure or severe disruption in the Strait of Hormuz, oil continuing sharply higher toward levels that materially worsen inflation expectations, so anything above that $100 round psychological threshold, the Federal Reserve becoming more hawkish in response to any higher energy prices, which right now we're in a blackout period for the Fed ahead of the FOMC meeting next week. So we won't hear from any FOMC speakers until next week. And then any disappointing earnings or cautious guidance from any major tech companies that weaken confidence in the AI growth narrative. So right now, this is what's driving market sentiment, and this is what could reverse market sentiment. The last thing that I will add to this is, of course, any yen carry trade unwinds via Japanese yen finance minister interventions with the currency. All right.